Hi everyone, in this episode of Take Charge Now, I'm focusing in on the Silicon Valley Bank collapse. There is a lot of chatter about it and there is a lot of concern about it still. What happened? This is a mid-sized American bank that really focused in on tech startups, the technology sector, often thought to be a little more risky. In fact, by 2021, in a low interest rate environment, this bank was taking in a lot of cash, investing in risky companies, but they invested their money, their deposit money, in 10-year US treasuries, hoping to pick up a little extra yield and betting that the Fed would not continue to raise interest rates. They did, and they were caught flat-footed. At one point, as rates went higher, bond prices went lower, they actually lost in terms of their portfolio about $15 billion. Last Thursday, there was basically a run on the bank and about $42 billion was withdrawn, and that was about, call it, a third of their portfolio. This was not a good situation. The Fed stepped in. The Fed did not want to see panic happen because when panic happens and there's a run on a bank, it can become a self-fulfilling prophecy. You know, even healthy banks don't necessarily have enough cash on hand to respond to withdrawal requests if they get a run on it. And they being the Fed, to shut that sort of philosophy, theory, and fear down. And that's sort of what happened. Sure, we saw a lot of banks sell off. Basically, everyone went down on that day. We're seeing some recover back. But the big question I'm being asked is, can this happen here in Canada? And my response is, I think it's unlikely. It's unlikely because the Canadian banks are well diversified. The regulators are on top of them. And in fact, we have greater loan to deposit ratios than those banks in the US. But not only that, we don't have the same focus on technology as they do in the US, or exposure, shall I say. But the big lesson is they were not diversified. The other question that I'm being asked is, okay, what is CDIC insurance? The Canada Deposit Insurance Corporation. What am I covered for? I can tell you at a blush, you are covered for $100,000, but you could be covered for so much more. Here's what's covered: savings accounts, checking accounts, guaranteed investments, drafts, money orders, certified checks, and even foreign currency like the US dollar. What is not covered would be stocks and bonds, cryptocurrency, mutual funds, and even exchange traded funds. But how do you get that 100,000 to 800,000? Here's how. You are covered for a deposit account, a deposit or savings account, savings and checking, with another person, a savings account where you have it held in trust, and then tax-free savings accounts, RRSPs, registered retirement income funds, registered disability funds, and registered education funds. That would be 8 different types of vehicles. That could take you to 800,000. I tell you this not because I'm worried about the banks and their collapse, just for information purposes. The other thing I will tell you, how do you know if your financial institution is covered by CDIC? There will be a purple lock on the door. It's a sticker, it's pretty basic, but it does highlight. And of course, you can always ask the question. The final thought here is, am I invested in the Canadian banks? Absolutely. Am I taking my money out? No, I'm not. I am here for the long term. Our banks are well capitalized. They have money in the bank, so to speak. And I think it's steady as she goes. It's going to be messy. There's going to be a lot of noise. Moody's has put 6 other banks on watch. There are going to be fluctuations there. But for now, I think it's steady as she goes.